Hey guys, DJ here from PTA. Want to go over these two trades, AMC and Gamestop today. Both was pretty decent runners. Unfortunately, I wasn't able to take advantage of any of these. Was actually off the desk today, but I definitely wanted to go over the trade and a video lesson on it just to kind of give you an idea and a concept of what or how I would have played them. Based on the charts, these were pretty strong. They've been strong out of the gate. So the first one we're going to go over is AMC. So as we look at the daily, we can see that it's been climbing. We had us a nice little slight pullback on a few days ago, and then we actually had a pullback on Friday, which pretty much set up like almost like a trap. The weekly high, this figure here was the last week's high, so it definitely cracked over that today and continued on. Now, as we go down into the smaller time frames, again, guys, I like to look at top-down analysis, so I kind of give me an idea of what was going on. As you can see, that gray line, which represents last week's high, pulled up here to form your A, settled back. This is probably where C was, and then right there, previous day high was probably a key area to look at to stop forming and performing well. So we go down to an hour, gives us a different description. I can see that it kind of formed based off of here. This again was another a key area. It pulled and then it ripped. So at this point, I know that it's in the uptrend. We had a nice consolidation throughout the week, and some people, play off the higher time frames to take a look at it and say, "Hey, this is the key area. This is what I'm going to look at as far as the area that I'm looking at getting in at is right here." So we see this nice little wedge pattern there coming into that day. So afterwards, guys, I like to look for that 30-minute pullback. So I go in and look at the 30-minute, and it made a nice rip into the day. Based off the momentum, based off everything, you probably could have waited for a 30-minute pullback here. That 30-minute pullback wouldn't have been to about here. So you probably would have missed majority of the day trade, but to play it safe, best thing you can do is always make sure you play in key areas. So this is pretty much the top of the day. We had a little bit of a pullback, shake, then we had the reversal. We had pullback, reversal, and then confirmation into the break. So once it actually got a nice exhaustion and pulled back, it kind of kept going. So somewhere above this area here is probably where you would have took your trade, because then it set its A. And then you take a look back on the 1 minute, looking at the area. Yeah, it probably would have been somewhere here. It popped up, pulled back, probably shook out some weak shorts, weak longs, I'm sorry, and then continued on and rallied on for the day. Another key area you could have got in, and like I said, it just depends on your preference. I never dropped lower than a 15-minute, but looking at the chart, it looked like it did give you a nice 15-minute break right here. And that's another key area you could have played it off of. So 30-minute, 15, I prefer the 30, but some people play it off the 15, like I see in the chat. You see the nice little pullback and then a nice little break there. So right off of that, that key area there of let me double check 2358 about area is probably where most people got in at. Has your nice tight stop loss there, and then it just kind of rallied on. That price action there, just from looking at it, this looks as though it was a nice little clean break up to the top. Um, Looking at $2 or something. Yeah, about 287 or so in that swing before it started to break down. As you can see, the pattern structure, it started to really kind of break down somewhere around here. So we had this nice little rally, swing low, got a bit of a consolidation. I mean, you can just eye this and see that it was topping out about here, and then it pulled back, and then made lower highs, continued to make lower highs, and then it knocked out that lower high. And that there is probably what got a lot of longs looking good at it, and then they flushed it. So after that, once they did that, this is how they accumulated everyone in this section here to later rip it higher. So, it always has to consolidate first. The consolidation is way easier to read on the higher time frames, and that's why I like using them. It's because you can actually see that it was still making higher lows. So it was still squeezing up, but on the smaller time frames, it gives you that illusion that, oh, it's pulling back, it's doing this, it's doing that. So you always want to use multiple time frames to kind of get a consensus of what's actually going on over the break and looking at those key areas. So it's pretty much how I would have played that stock on that day. The next one I want to go over with you is GameStop. GameStop took off pretty well. For those who still holding from last week, kudos to you because this stock was actually been on the move. We all know it's a meme stock. Today it looks as though it got over the 200 EMA, which gave it some more energy. 200 EMA being priced right here on the daily. So if we zoom down into, again, that 4 hour, you can see you had your nice little A rip, and then it bounced. So anything above this weekly will be an area of breakout, and then any retest and it holds will be an area of support. So I'll go back to the hour. It just kind of kept going. So you see it's still making higher lows throughout and then pushing it on out. Again, I like waiting for that 30-minute pullback. So looking here, your first 30-minute pullback would have been here. And it pulled back pretty strong. So looking at this, let's go down to a 1 minute. You can see here the stock kind of bounce, started to kind of squeeze up. It ripped and hit here. Probably had a lot of people to jump in right there. And you're looking at literally, let's see something here. Right here is the move. That break probably would have took you, that was a good $6, $6.97 break before you even swung back down. So just this break in 1 minute. So you figure from the time frame here, 11:27 Eastern Standard to 11:34. So you looking at a good 7 minutes of just straight run up. It's very aggressive. So we definitely was going to get a quick pullback, a bounce, and then people probably was looking at this as a key area, and then shorts got super heavy right here and pulled it down. But unfortunately, the buyer stepped in and kind of ripped those shorts out. So that's probably why you had such an aggressive move to the downside, because everybody was looking at this as a key area. And you can look at the stock and see how it just bounced. This bounce move right here is what really had everybody getting in it, and they got super confident here. And I only think it happened because of this super confident rip. So this was kind of like the play to get everybody involved. As you can see, the volume had kind of spiked outside of the daily earlier. You see that the volume kind of spiked here, and then the volume spiked here on the downside. We had a rip and a hill, and then it kind of teetered in this area. So that lets me know there was a lot of people still kind of sitting there in that position. So that was a key area there. Probably looks better on a higher time frames too, because then you can kind of see the break, and this is your 30-minute break there. Another one where, excuse me, this right here was just a great area of price action where it was consolidated. It probably whipsawed a lot of people in this area right here, because again, it's a 30-minute. It didn't grab it, and it just kept getting some confusion here, and then they finally slowly crept it back up. So those are the type of patterns that you want to look for and let it form. Once you start seeing it form, then that's when you take advantage or take action. Looking at it from 1 minute, 1 hour, it still was making higher lows. So those people there, the people who hold based off of the hour, higher time frames, they tend to stay in a trade and don't get wiggled out too easily. They wait till something breaks and then start to reevaluate the trade. But from here, Basically, once it got over this price here, it pretty much was gone at the 174.50s. That looks like that was the key area that everybody was looking at for a continuation to break. Um, and again, you're waiting for it to form. It broke here, but again, it never broke the previous swing low, so you would have held. It broke again, never broke out the previous swing low, and then it finally grinded out. You got to remember when you got these stocks that are like heavily traded, and there's a lot of people playing, especially very unexperienced people playing. What happens? You get a lot of whipsaw and choppiness simply because people scared. They let the stock rip. This stock had a lot of range. This stock has about $22 worth of range in it. So you got to give yourself some time to let the stock breathe and get to a point where it'll rip and go the opposite direction that you needed to go, whatever direction that may have been. So this is one of those stocks. Like for me, I typically play this from the higher time frame. So once I got my 30-minute break, I'm looking at it might have a $3 risk or $4 risk, but with a $22 gain, that's something that you got to keep in factor, and it stays within your risk code. This is the reason why you either scale back on your position, instead of putting up 500,000, 1,500 shares, maybe you scale back to 100 shares or something like that, and then load into this position so then you can build up 500,000 shares into the actual momentum and break into the stock. So just something to think about when it comes to your trading, how to scale, how not to get caught on the whiplash. Really just follow the larger frame charts, and that should help you out along the way. All right, guys, if you have any comments, questions, concerns, leave them in the comments. But as always, as I tell everyone, stay steady and stay focused.